Right. Hi, everyone. Thank you for listening to our new edition of our podcast. Today we have Pablo from Angle Protocol. Hi, Pablo. Thank you for joining.
Hey, Evgeny, thanks for having me. It's a pleasure.
My pleasure. It feels like as we discussed every single day in DeFi and in crypto lately has been like a lifetime, and we have all aged way too soon and way too fast. But nonetheless, the building continues. And it's interesting to look back at what happened in crypto the last couple of months and also look forward and discuss what is out there for DeFi this year and next year. So with that, it would be great if you could introduce yourself and tell us a bit more about how you came into this industry and what Angle does.
Sure. So yeah, my name is Pablo. I'm based in France. You will hear it from my French accent. I used to be a student in Polytechnique in France, and then I did a master's in engineering at Stanford University. Did lots of math, computer science, economics. I started playing around with DeFi quite late. I'd say end of 2020, getting yield on USD stablecoins after taking a class at Stanford, like getting yield on USD, on USDC. But at this point, it was a terrible time for the USD with respect to the euro because USD was crashed at this time. And the 4% yield I was making on compound, it was back then when compound yields were quite high. It was completely offset by the change risk, the euro USD change risk. At this point, I came to see some of my friends and I told them, look, guys, we need to build a euro stablecoin. I knew I wanted to work in crypto. I was applying in some crypto positions because I really liked my crypto class. This is the topic I found most interesting. And so my friends, with some friends, we started to think about how to make a euro stablecoin. It was just for us an opportunity that someone needed to take. And we were wondering, like, why has no one done this before? So we made up our own protocol. We didn't go the centralized way. Like, we didn't create a company to have €1 in the bank account and we issue a euro stablecoins like what EuroC is doing at the moment, because our knowledge was more like developing smart contracts in Solidity. And we are engineers, right? So we made up our own protocol. We didn't want to fork like Maker's DAI or any other thing you can think of, any other stablecoin design you can think of, because we thought and we still think we can improve over existing decentralized stablecoin designs. We raised some funds with it. We raised a $5 million round with A16Z, which trusted our stablecoin like design. And we launched our protocol on the Ethereum mainnet in November. Angle is the stablecoin the protocol we launched, and AG Euro is the first stablecoin we have launched with Angle. So I could later go on speaking and explain how our Angle works. But in very few terms for the intro, Angle is designed as an over-collateralized stablecoin protocol like Maker. But we have some capital efficiency features which enable our users to create AG Euro at a one-run rate, without having to commit too much capital. And since then, we've been working on integrating AG Euro in many places in DeFi. When it launched, it was the biggest euro stablecoin. Now it's still the most traded euro stablecoin in the market. And we are pushing the development of new modules around the protocol, around new chains. But these are things we can touch on later on.
Nice. And I mean, it obviously does make sense to have not just dollars, but also other currencies on the blockchain. But where do you see the kind of the usage and adoption coming from, right? So who are your main customers, so to speak, right? So who is spending those euros?
So first, I'll be honest. The first people who got AG Euro is people who like the protocol and wanted to farm the token. This is how the market works.
Yeah.
Just have to get used to it. Then there are negative interest rates in the eurozone at the moment, even with the inflation. Like this European Central Bank kept the 0.5% interest on the deposit facility at the central bank, meaning it costs you money to have money at the bank in Europe. And so people who are using us, some of the institutionals who are using us, are just people who want to avoid the interest rate, potentially get a yield in DeFi without without taking too much risk. We also have European DAOs which are paying their employees in euro, and they rather pay in AG euro than in USDC, so that they don't have to care about this change risk. So we are used for many different solutions. People want to avoid the negative interest rate, people who want to make a yield. This is the same basket. We have DAOs paying their contributors, and we also have people like using it as a mean of payment, as a real currency to reimburse like things they have advanced, the advances they have made to one another. And this is enabled by the fact that we're not only on Ethereum. AG Euro is available on Solana, it's on Polygon, it's on Avalanche, like any EVM chain compatible you can think of, we're almost there. Like,
yeah, I'd like to pick on 2 points that you mentioned here, which I think are pretty interesting in their own way. So it's funny to me, well, not funny, but very interesting that you said that the first users were, the farmers, right? Those who basically farmed the token or the token. And obviously, that's a big piece of what we do at Re7 by providing liquidity. And, we always had this thesis that the original usage and liquidity in these platforms is basically subsidized and incentivized by the protocols, that you have, let's say, professional liquidity providers to basically be the first power users and battle testers of the protocol, and then hopefully everything works well, and then your average and normal users can come in and actually be day-to-day customers. So we see it kind of as a feature rather than a bug, so to speak, of DeFi, because that's just how the mechanism works.
yes.
So yeah.
When you're launching a stablecoin, you're creating a new standard. No one has incentives to use your new standard unless there are other people using it, but there won't be other people using it. Well, it's a kind of a chicken and egg problem, and you need to find a way to create the network effects and to build the momentum around your stablecoin, so that even like people can really start using it without adoption. So decentralized protocols have this tool, which is liquidity mining and distributing the token. But like it's also a way to decentralize the ownership of the protocol. But what I must say is it's also needed to grow. It's a super growth tool to distribute the token.
Yeah, absolutely. And you're right, it's just bootstrapping a network effect, basically. And then the other piece you mentioned, that I've actually heard a lot of the same feedback, that a lot of DAOs and projects in crypto, when they need to pay their software developers especially in euros, they really struggle with bank accounts. So it's just so much easier for them to sell, because usually people keep their kind of treasuries in USDC or other assets, but it's very easy for them to sell it into something like AG Euro and just pay out through various streaming payment kind of services, rather than go and open bank accounts, which is just horrible and comes with much higher fees.
And that's why, when we have launched AG Euro, we've like from scratch made sure that not only you can enjoy yield opportunities with AG Euro, so we have that on Curve, we have that on Euler, we have that on Aave, but the important thing for us is the easiness of accessibility of the asset and how easy it is to, as a DAO, like, do you have the tooling to use AG Euro? Now we are integrated with Request, which allows you to send bills in AG Euro. We're integrated with Superfluid, like DAOs can stream their payments in AG Euro without having to like press the button every month to send to pay their employees. And we're also integrated with some off-ramp solutions like Mont Pelerin, which is one of the best off-ramp. It's a Swiss regulated exchange, and so you have AG Euro, one click, you can get back euros in your bank account. The DAO doesn't need to know that; they just need to know that their contributors will be able to use these tools to get paid, and that there won't be much friction in the process.
Nice, which makes a lot of sense. And if we take a step back from the beauty of the DeFi universe and we look at the ugliness of macro and what's happening, all around us in crypto markets and so on and so forth. Obviously, you mentioned that a big piece of Angle is working with lending protocols like Euler and many others. And I guess now is a good time to reflect and say, well, is actually lending in crypto a good idea? Because we've seen Celsius, BlockFi, and many other centralized lending parties to suffer a great deal of losses. So what's your reflection on the events that took place and you're kind of thinking about this going forward?
My thoughts is that the events that took place showed the power of DeFi protocols. Compound, Aave, Euler, even like Market.xyz, 100 Finance, to name a few, they've all held super well. The point of common, what they have in common is that they are decentralized protocols, fully transparent. You know what they have in reserve. They have functional liquidation mechanisms which help maintain the over collateralization of borrowers. It's not so efficient, but you know it can resist like adverse market conditions. Celsius, BlockFi, these were not transparent. You didn't know what they were doing with their reserves. Like Re7 Capital managed to borrow from these people because it was kind of blurry what they were doing with their reserves. And this is my lesson. Like, if as long as you're transparent, and this is what DeFi is about, then there's nothing to worry about. And lending in DeFi is a killer feature. You know, it's the first base you want to build. And for me, it's a proof of the sustainability of the system. What recently happened.
I share the same view. So we've seen multi-billion-dollar lending firms literally blow up, whilst these DeFi protocols that were built by a bunch of software developers stood firm. And you're right, transparency is a big piece. Automated liquidations are a serious kind of feature of that as well, because you, unlike if you borrow from a bank or from a broker, they'll pick up the phone, they'll call you, they'll ask you to top up your collateral, so on and so forth. But in DeFi, there is no one to call. You just get liquidated immediately, which is a little bit more unapologetic and kind of brutal, but that's a fair system which becomes more robust. And it's incredible that it basically shows that instead of trusting teams of potentially very professional risk managers, you can not trust anyone and build a system in such a way where you don't need to rely on anyone being professional, disciplined, so on and so forth. You can just build a system that works at any point in time, which is a complete testament to what DeFi has built.
I agree. I agree.
And how does lending, borrowing, and liquidations, how does it all come into the Angle protocol? How does it all come together? And what's your approach to this?
It's a wide question, different things. So first, in terms of how do we approach lending protocols, we need to be integrated with them. AG Euro needs to be available in there. When you're launching a stablecoin, I mentioned earlier the fact that it's a new standard, you need people to use it. And the easy way for people to use it is for them to see it in main lending platforms to see they can make a yield on this. So we are being super proactive with all lending platforms. By the way, I'm going to post either today or tomorrow a new proposal to upgrade the status of AG Euro on Aave. Nice. So we are trying to list AG Euro almost everywhere. The thing is, you won't have yield in lending if there is no one to borrow. And it's kind of finding other single-sided places where people are ready to use to borrow for AG Euro. And how do you create a native yield on your token that gives people the wish to borrow your stablecoin? Well, there are protocols like Curve, but essentially on AMMs, like people can borrow, are maybe ready to borrow your stablecoin if they're able to make a yield which is high enough by providing liquidity for it on algorithmic market makers. That's like first thing of lending. We need to be able to propose a yield, and we need other interesting opportunities for borrowers. This comes with volume, so you need to create volume for your stablecoin. In terms of how do we facilitate borrowing also at Angle, we are doing something that we call algorithmic market operations, where we lend AG Euro to lending protocols. It's unbacked AG Euro, meaning we just mint AG Euro, print them, and lend it on Aave. The cool thing is that these AG Euro are not per se unbacked because they are not in the market. They will only go back in the market when they are borrowed by other people. In which case they will be over collateralized depending on Aave, how Aave was built. But we are trying to incentivize people to borrow, but at the same time we're giving a lot of liquidity for people to borrow, and the security of the protocol becomes also, to a certain point, the security of the lending protocols on which we are minting this AG Euro. It's something Frax has been super proactive in doing. Fei is doing it. Even Dai is doing it. The product, it's called the D3M on Aave. And I think all stablecoin developers have understood that they can directly mint stablecoins in lending platforms. In that regard, I wouldn't be surprised if Aave or Compound were launching their own stablecoin. because it's super easy for them to do so, and it wouldn't provide much value. I think it would more fragment liquidity, but yeah, they could theoretically do it. Last thing I want to mention, in terms of borrowing, when you borrow on a lending platform, you do not really control the yield, and it's a variable yield, unless on Aave, they have some fixed rate borrowing. On our side, we've decided at Angle to launch a borrowing module really similar to what Maker is doing, where you can borrow 80 euro at a fixed yield. We made sure that this yield at which you're borrowing is pretty small with respect to what you can have on Compound, on Aave, on Euler. But yeah, like it's when you're a stablecoin, a lending protocol, you can launch a stablecoin, but when you are a stablecoin, it's also easy for you to launch your borrowing module. And it's a way to natively and get more control on the use cases around your stablecoin. So you also gain a share of the revenue, of the lending revenues which are made when people are borrowing your stablecoin on lending platform. So it's kind of how we approach lending. It's super wide, and there are many, many things to do. You just have to be pragmatic and flexible enough to do the things where you can bootstrap the growth of your stablecoin, and you can also capture value for your token holders.
That's a lot, but very interesting. One thing you mentioned, that you can issue EUR which is not backed by anything. Isn't that dangerous? Because obviously we saw, UST stablecoin stuff taking, a beating. So I understand how your mechanism is different, but I think for our listeners it could be interesting to kind of understand the details better.
So I'll take the example of DAI. I can also take the example of EUR, but Maker, what they are doing with DAI, they are minting DAI on Aave. It's not DAI that it's DAI that is minted really from nothing. In fact, the DAI are backed by the A DAI, Aave DAI, and so you mint DAI, you get A DAI that ends up backing the DAI. In the end, there is nothing backing this DAI, but these DAI are owned by MakerDAO. They are not really in the market. Like Maker will never withdraw this DAI and do other things with it. It's owned by the Maker, by the MakerDAO, and so they are not in circulation. They are minted out of thin air, created, but not in circulation. They only come up in circulation, like in the market, when they are borrowed by someone. Let's say I see an opportunity for DAI, and I see that the cost for borrowing DAI is inferior to either the cost of lending it in another place, or is either inferior to what I expect the collateral I'm using to borrow this DAI, what I expect the price increase will be. If I expect the price increase to be 10%, I can long this even if I can borrow DAI at like 5%. So that's how it is for leverage. But in this case, if I'm borrowing DAI in the market, I need to put another collateral to borrow DAI. I need to put ETH or ETH and BTC or ETH, USDC and BTC, and then the DAI I borrowed, in fact, it's over collateralized. It's over collateralized by the deposit of the person, by my deposits on Aave. So in the end, MakerDAO mints DAI, but for people to really mint the DAI, but over collateralized, not by collateral on Maker, but by collateral on Aave. I don't know if that makes sense, but it's not dangerous. It's as if you literally had all the Aave protocol, like as if the Aave protocol was a part of your protocol to mint the stablecoins.
That makes sense. So I guess the TLDR of that is that even though technically some of those assets are unbacked because they're not in circulation, it is completely different to how Terra system operated.
It's completely different, because in the end, they will be over collateralized.
Do you see much potential in launching other stablecoins linked to pounds, Swiss francs, or whatever else?
I see it. I really see this potential. Several remarks. So first, there is the chicken and egg problem. We would have to act again for these stablecoins, and it's rather hard. Like to create liquidity, you need to put incentives. So for us at Angle, with our new architecture, it's really super straightforward to create like a new stablecoin, GBP, CHF, any currency you want. It's super easy. Will there be liquidity for it? I'm not sure. You need incentives. You need to get the right integrations at the right time for people to use it. Other thing is we've been exploring, and I really like, I've made some talks about it, talking about inflation-resistant stablecoins. Like there are many ways for which I don't think some designs, I think some designs will not work, but like the borrowing module, our borrowing module, similar to what Maker has, where, you know, you just put ETH, you borrow something, it can work. It can account for an asset that resists inflation. But will there be people willing to borrow it? Same for CHF. Like, are there really going to be people who will be okay borrowing CHF stablecoin? Because if the stablecoin is stronger than, if the currency is stronger than the dollar, you're better off borrowing dollars, since your debt will increase like more slowly than when you borrow CHF, and your liquidation risk is bigger if you borrow CHF or an inflation-resistant stablecoin in this sense. So yes, we can, but will people use it? I'm not sure. There is demand for it, and the question is, how will demand offset the borrowing cost? I really like to experiment many things with Angle, even things that don't work, and only things that do not put a risk on the protocol. And I think that launching new stablecoins won't put any risk, and it won't consume any time for us. So I must say that I'm pretty for doing it. I'm not the only one who can decide, but this is my vision.
And I'm personally fascinated by launching inflation-linked stablecoins, because then you create a new form of money, which is linked to something real, but is also more useful than just having cash that, you know, loses money all the time. So how would that work? Would that be linked to some inflation index? Like, where would that kind of appreciation come from?
So you need an oracle to estimate inflation. What there are, like Forex did with the FPI and Volt did with Volt, their stablecoin, inflation-resistant stablecoin. What they're using is that they are using the CPI, which is updated on a monthly basis. The problem with it is that the CPI is based on computation that vary, you know, like in some countries, they don't incorporate the cost of transportation. In some country, the weight of food will be smaller. So it's a quantity, an index that depends on human interpretation. And you don't want to base your whole system on this, I must say. It works, but it's like methods can change. And also it's front-runnable. Like rate is, the CPI is updated once every month. So rogue actors could technically take advantage of Oracle updates to do actions that lead the profit to them. So this is one issue of using CPI. The approach I like is comparing like the price of treasury inflation protected securities, like inflation-linked bonds, government bonds, and compare the price of these bonds with non-inflation linked bonds. Like, you know, German debt, you have inflation-linked German debt and non-inflation-linked German debt. And by comparing the price of both securities, you can estimate the market's anticipation of inflation.
It's like
you're sort of relying on the CPI, but in a more robust way. And then you can make an oracle based on that. I think it works. So this is how you make the oracle. Then how do you make your protocol? Senior rate share, it doesn't work. It doesn't work for the USD. It cannot work for something which is stronger than the USD. There is the hedge fund model, like Frax and Volt are doing. You give us USDC, we're going to invest this USDC, get a yield on this, and hope that the yield we're making is bigger than inflation. I'm not sure this holds at scale, and I'm not sure this will work like right now. And then you have like borrowing protocols like Maker, but who is going to be willing to borrow such assets? Who will be ready to borrow an inflation-resistant stablecoin if you can borrow USD? Yeah. Then you could also do it in a centralized way. Like you give a company USD, the company buys treasury inflation-protected securities, but you would need to constantly readjust your portfolio based on the rates of the bonds you bought, and there is some illiquidity in the bonds. So it's going to be hard to do at scale.
Yeah, I agree. It's an interesting problem, and yeah, people approach it different. I think those who crack it will really open up a massive market and a massive opportunity, because it just makes so much sense. And what's I'm curious. So there is, 100 plus USD stable coins in the market. What's the current value of non-USD stable coins altogether? What's kind of the size of the market right now? Of
USD stable coins, you mean?
No, non-USD stable coins.
Non-USD. There is one big non-USD stablecoin. It's a Singapore dollar, but I'd say that the size is overall less than 500 million. not more, or like a billion.
Yeah. Do you see a future where there is a Forex market on chain?
I do for some reasons. First, in Forex, there is no unified price feed. Like there are multiple venues where you can trade. And in crypto, you could have like a single price feed for Forex. Like you cannot trade in the weekend. In crypto, you can trade during the weekends. So like at the first place, Forex market on chain will not be as good and as efficient as Forex market in traditional finance. But it's a $6 trillion it's a market with a $6 trillion volume daily, with serious limitations, the ones I just mentioned. And in DeFi and blockchains, you have the technical settings that allow you to make something which truly improves over the TradFi Forex market. So yeah, I'm pretty bullish about Forex and DeFi.
Nice, but I guess we'll need to wait a bit more before we
You need liquidity for people to be able to take leverage, because it's markets in which there is liquidity, like volatility is really, really small. So you need to enable a super high leverage. At Angle, we let people take up to 100x leverage on Forex. You can long the dollar, short the euro. We're the only ones to do it on chain. Demand is still rather small, but like we're the first one. It's just the beginning, you know.
Yeah, we're gonna get there. Just a question of time.
I guess so.
Cool. And what's the one thing that excites you most about DeFi, when you think about it a year or 2 years ahead?
I'd say under collateralized lending protocols, protocols like Goldfinch, Maple, those who are really providing a value out of DeFi, those who are leveraging the fact that DeFi is also open finance, where it's easier to gather funds, where you can do things more efficiently than in traditional banking systems. This is what I'm really bullish on.
The challenge that I see there is that I can understand how someone like Maple can go and lend to reputable firms, well, reputable in the space and well-known in the space. I find it very hard to find a solution to lend to anonymous wallets. So do you think the future where I can just load up my blockchain wallet and go and borrow some capital?
I don't think, yeah, it could happen, but that's not what makes me bullish of this. Like what makes me bullish is the opportunity for real businesses based in some countries with KYC wallets to borrow funds and with legal repercussions if they fail to reimburse. Like, and why I'm bullish on this is that DeFi is like, it's more efficient than traditional finance, and while still keeping like credible risk levels, minimum defaults, and doing all the serious job that banks are doing when they're lending to someone. Like you can cut some middlemen, which makes it truly more efficient than which can make it truly more efficient than traditional banking systems. That's why I'm here for. Like I'm here for improving the efficiency of traditional finance, building a money layer that people will be able to use. And that's why I'm pretty bullish on DeFi in the long run. Not on DeFi as it was in the previous cycle, where it was basically just farm and dub tokens. Well, it's going. There are going to be future cycles where this happens back again. But in the meantime, I think that these are the innovations which are going to change a lot.
I agree. So far, DeFi has been just bootstrapping its own growth, and people have been trading with each other and kind of just getting everything going. But clearly, the future is real use cases where DeFi meets the broader world and the broader financial system. Cool. As we wrap up, would you like to leave our listeners with some final thoughts, Alpha, or just anything you can think of?
No, like what I can say is that the biggest mistake in DeFi is to leave. It's my first bear market. I'm not tempted at all to leave from the industry. I'm here to stay, here to keep building. We're on stablecoins at the moment, but there are so many other things and ideas we've had and that we could develop. And Angle will always be pushing for a more composable finance overall.
Yeah. Well, and that's the future. And hopefully when we speak, days, weeks, and months from now, it will be another bull, another bear, and it will just keep coming and going.
It's part of how it is. Like we are here for the mission of making a better finance.
Yeah. Well, that's the perfect ending to our podcast then. Thank you very much, Pablo.
Thanks, Evgeny. It was a pleasure. Really. Thank you.
And then we'll hopefully do it again.
Sure.